Welcome to this explainer. Today, we're going to do something really special. We are distilling 40 years of absolutely battle-tested financial wisdom from Peter Tuchman. Now, if you don't know the name, he's the longest-standing trader on the floor of the New York Stock Exchange. People actually call him the Einstein of Wall Street. And look, whether you're a seasoned day trader or honestly just someone trying to figure out how to start building a little wealth, the insights we're about to unpack here are completely foundational. Okay. Before we jump into his specific strategies, we kind of need to understand the sheer volume and the intense psychological pressure this guy operates under every single day. We're not talking about theoretical textbook advice here. We're talking about someone who handles up to $1 billion of order flow on a daily basis. That's a billion with a B. He has survived quite literally every major financial storm of the modern era.
So, here's our roadmap for today's masterclass. We'll be covering 1. Surviving Wall Street market crashes. 2. The secret trader mindset. 3. The retail investing revolution. 4. Buy stocks, not stuff. 5. Finding secondary market trades. And 6. Managing risk and taking profits.
All right, let's kick things off with Section 1, Surviving Wall Street Market Crashes.
To really get Tuchman's supreme credibility, just picture the contrast of his career. When he started out as a summer intern back in 1985, the floor was this chaotic, screaming sea of 7,000 people trading on physical paper tickets. Fast forward to today, advanced tech and algorithms have totally changed the game, bringing the floor down to just 700 people. But, and this is crucial, even with all that automation, the need for sharp human instinct at the actual point of execution, that's absolutely vital.
Because surviving Wall Street literally means navigating disaster. Tuchman stood right there on the front lines through the Black Monday crash of '87, the dot-com bubble bursting in 2000, the 2008 global financial crisis, and of course, that crazy 2020 COVID-19 market plunge. And you know what? He notes a fascinating common denominator here. These devastating crashes almost always happen when the market is trading at record highs, not when it's been slowly eroding over time.
Which brings us nicely to Section 2, the secret trader mindset.
You're probably wondering how anyone handles $1 billion a day without crumbling under the pressure, or honestly falling victim to that rampant Wall Street greed. Well, Tuchman saw the dark side firsthand. He actually watched Jordan Belfort come down to the floor offering $1 million to brokers to illegally front-run stocks. That's essentially using inside knowledge of big client orders to guarantee your own personal profit. It ended with guys leaving the floor in FBI handcuffs. For Tuchman, witnessing that reinforced the absolute necessity of strict ethical boundaries.
So how did he engineer his own peace of mind? This is brilliant. For most of his career, he intentionally did not own personal stock, none. By isolating himself from personal ownership, his own profit and loss weren't tied to the market crashing or rallying. He was executing trades purely on logic for his clients. He entirely avoided that emotional, gut-wrenching panic that happens when you watch your own net worth just evaporate in real time.
Moving right along to Section 3, the retail investing revolution.
Look, Wall Street used to be a totally closed club. It was an era of accredited exclusivity, where you needed massive disposable income just to prove you could withstand the losses. But during the COVID-19 pandemic, that landscape completely flipped. We shifted into a wildly democratized era. Today, anyone with a smartphone and $100 can download an app and enter the market instantly. The gates are totally open.
And this brought in a whole new wave of tech-native day traders. Tuchman observes that because this generation grew up navigating super complex video games, their transition to rapid-fire digital trading platforms was incredibly seamless. They're fast, they've built massive online communities like Wall Street Bets, and honestly, they're highly skilled. If they can just implement strict discipline and follow the rules, they possess the legitimate capability to beat the market.
Okay, on to Section 4, buy stocks, not stuff.
Now, what if you're not day trading, but you just want to build long-term wealth? Tuchman champions a really simple but honestly profound philosophy to shift your consumer mindset. We are undeniably the most brand-loyal generation in history. But instead of buying the newest iPhone the exact moment it drops or blowing cash on impulse buys, Tuchman says, buy the shares of the companies that make the products you fiercely love. If you believe in a product enough to hand over your paycheck for it, you should believe in the stock.
$1.4 million. That's a big number, right? Well, let's actually break down the math to show you exactly how powerful this mindset shift can be over time if you stay consistent and disciplined.
Think about it like this. If you can identify your wasteful spending, take a breath when you get that 20-minute urge to impulse buy, and instead redirect just $250 a month into the S&P 500 starting at age 18, you could sit on $1.4 million by age 60. Seriously, you don't need to be a Wall Street insider at all. You just need patience, and you need to let the magic of compounding interest do the heavy lifting for you.
Next up, Section 5, Finding Secondary Market Trades. Once you've got the basics down of investing in what you know, the next level up is looking past the obvious big-name brands. Smart investors are always hunting for secondary and tertiary trades. That means, instead of just buying the stock of a massive tech giant, you do your homework to find the hidden gears. I'm talking about the independent companies making the specific microchips, the raw materials, or the internal components that actually make that main consumer product function.
Let's look at a perfect, real-world example right now. Artificial intelligence. Sure, the primary trade is buying AI software companies. But the tertiary trade? That means looking for the catalyst. AI requires absolutely massive data centers, and those data centers require immense physical energy grids to run. So, innovators supplying that power are seeing huge growth. And it goes even deeper. Prominent investors and politicians are already pointing to foundational resources, literally things like water, as the next critical market catalyst. You've got to look one layer deep.
Finally, we reach Section 6, Managing Risk and Taking Profits.
We have to talk about the ultimate downfall for pretty much everyone on Wall Street, unmanaged greed. Let me tell you a story from the dot-com bubble. Everyone on the floor watched Yahoo stock just skyrocket. They all held on, greedy, hoping it would go to the moon. And they got entirely wiped out when it crashed back down to $3. But one trader, a guy named Frank Murphy, he walked away with $20 million. Why? Because he happily bought at 3 and sold at 8. Then he bought again at 50 and sold at 60. He consistently hit base hits and locked in his profits while everyone else let greed totally blind them.
So that brings up the million-dollar question. When is it actually time to take a profit? You know, the fear of missing out, FOMO, plus hype, plus hope, those are terrible trading strategies. They just lead people to hold positions way too long. So how do you logically know when to step away? Or conversely, when to jump into a super volatile situation? Well, when dealing with wildly hyped events, think about highly anticipated IPOs trading at just crazy valuations, Tuxman's battle-tested advice is restraint. Just wait for the market to actually open, let all that irrational enthusiasm settle down, and never, ever try to catch a falling knife by buying into a plummeting stock just because it suddenly looks cheap. You want to buy into confirmed momentum, not blind panic. Because at the end of the day, risk management is literally everything. You should be utilizing tools like stop orders to ensure that if a trade goes against you, you're only losing pennies, not your entire portfolio. It's like Tuchman constantly reminds young traders, nobody ever went broke taking a profit. Protect your capital so you can live to trade another day. So as we wrap up this explainer today, I really want you to think about your own financial future. Are you going to keep just consuming the brands you love, or are you going to shift your mindset and start owning them? Are you going to chase the obvious hype, or are you going to do the homework to find the hidden infrastructure powering tomorrow's trends? The rules from the Einstein of Wall Street are laid out right in front of us. The only question is, how are you going to use them to start building your wealth today?